brokers aren't against you, but they're not with you. You know, they're just a middleman. So yeah, I wouldn't really focus too much on your broker doing anything unless it is an unregulated broker. USD BRL. I don't think I've ever looked at the Brazilian markets. This looks a bit hectic already. What's going on here? To be honest, actually, I mean, this looks like a bit of a no-brainer to buy. Nice level of support through here. 200 moving average isn't too far off. So maybe if we could see, and just to clarify, this is all based off technicals. I don't know the economics behind the Brazil enough to really give a breakdown on it. But I wouldn't be too mad about, wrong way, about potentially going for a long position here off this level of support, let the 200 moving average catch up, stop below support, something along these lines would kind of make sense. We could potentially fill the gap here. In fact, there's quite a few gaps that could get filled, which are quite a nice sign to go long here as well. So yeah, maybe I'll keep an eye on this one, do some research. Oops, wrong flag. There we go. Pound Swiss. Emmy, I can't. I'm sorry, I can't disclose why we're selling silver. So I say this sometimes where I can't tell you the reason behind some trades. The reason that I say that is because the trader that works for Elite Traders is an investment manager. He's not a retail trader like me and you, or, you know, so that generally speaking. So a lot of his trades are sent to clients and large investors. So basically there's an NDA in place. I can't go and publicly give out his trades. So yeah, unfortunately that's kind of the payoff I have for having a trader of his level. So it's a bit unfortunate, but yeah, I mean, obviously we give them in the Discord because that's private, but publicly, I'm really sorry, I can't do that. So pound Swiss, let's see. So yeah, I don't want to fib there. Essentially the same situation here. I do see the pound as having some more steam left in it. Just because I'm bearish long term, it doesn't mean I can't be bullish short term. I think, whoops, it wouldn't be out of the question to potentially get back to this high at least, and then potentially higher. So the issue is where's my text gone here? Oh, it's white. Yeah, I don't want just a one-to-one here. So this is the daily. Let's have a look on the H4. The hourly's just switched to bullish here, which is a nice sign. The H4 is still bearish. So with that in mind, I think I would need to see break, retest, continuation, and then long position off the retest up to the high, stop loss below this level of support. So it'd be more something like this, I think would be the approach. So yeah, we'll see about that one. Great insight, thanks. Good crew here in Bali, my guy. Hit me up if you're here. Yeah, for sure. I think I'll probably go to Bali later this year and have a look at some. I've never been to Bali, so I don't want to move there without visiting. So I'll be in Bali later this year, I think, just having a look around and some properties and things. Loving the market breakdowns. Thank you. Oh, getting a lot of love today, guys. I appreciate that. Thank you very much. Makes me smile. So NZD cat, I think it's probably the last one. I'm off in 4 minutes, so I'll cover this one and then my time's done. I think I'm on tomorrow, as far as I remember. So again, New Zealand, not too happy with. I think similar situation with the dollar CAD. Actually, I would like to see a lower price here. So I think because we're in double dip recession, I mean, it's not new news. You know, New Zealand's not been great for a long time, but it's still holding up. But it's still not a currency I would like to be going into buy positions with at the moment anyway. I think the Canadian dollar has some potential coming up with maybe higher oil prices later this year. So yeah, New Zealand CAD to the downside doesn't look bad to me. We've actually just rejected this 50% pullback as well. So this would have been a really nice trade if I was paying attention. Something like this would have been great. We are still, yeah, price is still underneath the 200 moving average on the daily time frame, which is a good sign for continuation of the downtrend. Hourly's consolidating a little bit, so not the best. So I wouldn't be selling right now. Just because the hourly is consolidating, I would like to see a slight push to the upside one last time, and then maybe execute into some short positions here. So yeah, I'll keep an eye on that one. But that's a technical approach. I've got 3 minutes left, so let me just have a look here for you and see here. So we've got Kiwi. There's actually not much here about the New Zealand Canadian dollar. So bullish on CAD relative to USD, but favoring AUD over CAD based on valuations and rate differentials. Bank of Canada Fed divergence and USD CAD expectations. The narrative of Bank of Canada Fed divergence is nearing its end. USD CAD strength is expected if the Fed implements 25 basis point rate cut in September instead of a larger non-standard cut. Anticipated weakening of USD CAD as the Fed starts its easing cycle into 2025. Through this will be moderated by a weaker global growth backdrop. CAD positioning and trade recommendations. Now, just to clarify, these aren't my recommendations. All this information is aggregated from bank reports. Leveraged funds have increased short CAD positions by 19,821 contracts, the largest on record. CAD is expected to remain range-bound in the short term, but has potential for rally in 2025. New trade recommendations include taking short positions on New Zealand dollar CAD. So there you go. Now, again, just one last time, it's not me recommending these trades, and it's not A1 or it's not TraderNick. That's just copied and pasted from bank reports that I've read. So now that disclaimer's out of the way, the short position is backed up there. So yeah, I think that's it. My time is up, so I'm glad we got most of the things out of the way. Chris is up next, so I'm sure you guys will have some questions for him, or he can take over some of the questions. As for DAX, we've already covered DAX. Feel free to rewind. But yeah, I think that's about it from me. So guys, thank you very much for watching. As always, I appreciate you all. And yeah, I think I'm back on tomorrow, so I'll see you then. So yeah, enjoy the rest of your days. See you very, very soon.
If you're someone watching the show right now and you're outside of the US looking for a better brokerage, listen up. I wanted to take a moment to mention today's live stream supporter, Vantage. Vantage allows traders outside of the United States to trade CFDs. You can trade everything from commodities like gold, you can trade US indices or global indices, and you can even trade FX all under one brokerage, and you can connect to MetaTrader 4 and trade directly on tradingview.com. Not to mention, they also have a really good sign-up bonus going on right now. So we'll drop the link to that down below in the chat as well as in the description of this live stream. Check out Vantage. Now back to the show.
Hey everybody, happy Wednesday. Welcome back to the session. We just had some CPI news drop this morning and trying to make some sense of what the market's liking about it, not liking about it. I did notice that the Fed watch tool has flipped once again to now the higher probability is the Fed cutting only 25 basis points. I think a factor that had to do with the CPI news that came out today. This print probably has maybe the echoes of stagflation. So that would be, slower growth and sticky inflation, right? I was looking at the Fed websites and seeing that the St. Louis Fed, Atlanta Fed had forecasted for, Q2 or the year over year to be showing around 2.7, 2.74, and it didn't print there. I was actually kind of surprised. I thought that was intentionally high to have a better print. We had solid PPI yesterday. The market ripped all day yesterday, very steady. But anyway, printed 2.9. It's better than before, but at the same time, look at your previous month over month core and month over month CPI, negative 0.1 to 0.1, and they printed 0.2 as expected. So, month over month was slightly higher and year over year was slightly lower, but same print. So we're right back at the same window of sticky inflation, right? So if we go into the Edge Finder for a moment, take a look at your inflation data year over year. We just can't budge this 3%. We can't really kick this 3%. It's been lower, right? I mean, this print right here, it's been lower. So since a year ago, we've essentially had inflation the same in the US. So what does it take to get inflation to drop? You hope that it's not times have to get tougher. We have to have more of a threat of a recession. Things have to be really slowing down. You hope that's not the case. But that's where we're at. So I was not super impressed with the print. I think price today is fairly indecisive. I'm trying to get a couple bucks out of a SPX trade this morning, which right now I'm pretty close to hitting my profit target at 290. So I'll be watching this for this morning to close up. I just took a trade this morning that I'm happy to share. I did the SPY trade. So let me bring over. Oh, this chart is so ugly now. Just bear with me. So I looked at some of my gamble levels for this week. This trade is going to go out a little bit further, but I went and did a trade. If you can see my writing here, so I did an 8:30 expiration. I bought a 5:35 put, so that's a long. So +1 at 5:35 put, and then a +1 at 5:50 call. And against that, I did a -1 at 560. And up here, I did a -1 at 525. So right now we're trading at 541. I'm giving price until the end of the month. We have Jackson Hole. We have retail sales tomorrow. What else do we have tomorrow? We have retail sales and unemployment claims, right? Yes. So that might be enough. Oops. That might be enough to maybe shake the markets loose with a little volatility, but we've already moved $13 on the week. The average trading range for the week is around $13 to $14 on the SPY. So that's why I'm taking this trade out further and looking at the next couple of weeks. So I already did a trade this week where I'm going out to September, looking to see if price gets to like 555, gets down to 515. We'll see what happens over the next few weeks or the next 4 weeks actually. But in this trade, I'm just using what I have in the near term. This gamma level stands out, and this gamma level plus the gap yesterday starts to stand out. So if the bears are interested in filling anything, gap fill is great. If the bulls are interested in this melt up continuing, then we just continue to melt up. But these are the two levels that I'm watching. So I'm going to construct a trade based on that. As I took the trade, it cost me about $4.75. I put in a limit credit around 950, so I'm going to try to double my money with a 100% gain. There should be enough in there where if I get just the options themselves, okay, I've got to be close to hitting that profit target. Come on. Let's go back to the SPY right here. So August 30th, this trade. So there's my long call. There's my long call, my short call. So that's my debit spread. And there's my long put and short put debit spread. So right now we're trading around $6 at the money. So realistically, even if price is going to gravitate, so this goes out, 16 days. If price is going to gravitate towards my put side, I should at least see $2 to $3 of credit. Where this is trading for $4, it's probably going to trade for like $6 or $7. That's still fine. Like I'd be happy to take profit there. Mechanically on option trades, I typically look at a 15% target, 25% target. Those are high probability winners. If I'm going after something bigger, it's because we're getting a bigger move. Again, maybe tomorrow's a big, crazy directional day. Maybe it's not. Jackson Hole is next week, but we do have retail sales unemployment tomorrow, which I think the market's more more sensitive about since we saw everything kind of dump on Monday last week. Okay, so let's talk charts. Let me try to clean this nonsense up a little bit. Just see the trees, through the forest. Okay, so I don't think there's really any big reason to be bearish until we have price rolling into the right side of this trend line. Okay. So I get it in here. It's like, technically I'd love to see this level call a top in the interim. I could see the bulls maybe testing this high and then fading back down. So we have two trend lines, and I'm just going to paint here in a thick black line. So two trend lines that we'd be watching. This trend line for the upside. If the bulls can keep price holding on to that trend line support, that's fine. If the bears keep price trending here, that's fine. Now, one thing I actually talked about this morning in my trading room is there is this little secret to indecision. Okay. If we have a swing from high to low, which we just did, all right, so this would be our high, this would be our low. If we see the market pull back 70%, it's not a Fibonacci number, it's a Gann retrace number. But I've seen over my career that a 70% pullback, that's pretty good. Drew that pretty much spot on. A 70% pullback right in here, okay? A lot of times that means that there's no structural damage to the upside, there's no structural damage to the downside, but what we have instead is we have a pullback of 70% and then another push lower, and then this swing becomes 70%. So you go from 70% high to low to a 70% low to high, and then back again, right? And all this is doing is creating more of an indecision look like that. I could see this. I could see August doing this for the rest of the month. The market put in this big high shakeout, and then we had a rip, we had a recovery, but now the market possibly slows down. Possibly. Now, we're not at 70% yet, not even close, but I'm kind of looking to see where does price pull back. Right now, we're sitting around 50%. If we fade at 50% right here, okay, this is 55%, here's 50%. If we start to get back below this level and look for a gap fill, then perhaps the bears are a little bit more serious. I read some interesting stats. I mean, look, I'm sure you all saw it. How many of you bought on Monday last week? How many of you bought your favorite stocks, your favorite indexes? If you did, excellent choice. I like the idea of some short-term profits, to be honest, because the numbers were pretty staggering. Nvidia has dropped 35% from the highs, and it's already ripped close to 30% off those lows. Now, keep in mind, if you drop 35% to the downside, you have to have like a 50+% recovery to get all of it back. So Nvidia has to rally 50% to get back to all-time highs. Bitcoin, we dropped down below 50K. We ripped up towards 60 and change. That was a 25% rip almost. Meta up 18, Nikkei 16, Tesla 14, Apple 13, Amazon 12, Netflix 10, NASDAQ 9, maybe 10 today. Microsoft 7, S&P 6 and change, then Google 6. So we had some pretty aggressive short-term rallies that I don't know if they're going to be full on and permanent, but at least off the initial drop in the market kind of stabilizing that Monday morning, it's been a pretty good run the last week plus. Okay, let me check my SPX and see if it's in profit. It's trading right around $3. My trade this morning, $3.40. Trying to get $2.90 out of this thing. Come on. Give me another 10, 15 cents. Okay. So I'm going to go top down. So anyone have a request, gold, silver, Bitcoin, futures market, I'll do SPY, SPX, ES, okay, NDX, QQQ, NQ, Dow, Russell. I've got a penny ratio spread on the Dow that I put on yesterday. Still watching the Russell closely. I got some pin prices, 2050 and 2100. Watching those levels carefully. We've actually had a pretty crazy rip down on the VIX. This is ridiculously impressive to see the VIX drop as aggressively as it did, which honestly, all of you should be thanking the VIX, because this could have been way worse, way, way, way worse. We could have had, The first close up here at 50. This is a 4-hour close, but a close here at 50, a rip up to 60 plus, and then immediately we're opening here at 38 for that trading day on Sunday, Monday, which was like I just I don't know if you appreciate how wild and crazy this is. It was the second largest move ever in this volatility instrument, and the market was only down. I mean, when this happened, this is what led to, okay, the S&P dipped about 10%. The last time we saw readings this high, the market was down 25%, 35%, 50%, right? 2, 3 times in history. 2000 dot-com bubble, 2008, COVID, and now. So you're looking at 3 to 4 times, 3 to 5 times over 35 years, 34 years that this instrument's been higher, and this index was barely lower. Yes, the Nasdaq was down almost 20%. The SPY was down, or the S&P was down nearly 10%. But it's like that seems like a very high reading. So here we are, just completely retreated. Right, this dropped all the way back into now historical averages. We've retreated about 74%. So the trade that I did like, and I'm happy that I got into, and it's still not done. I put in some naked puts on the SVXY, and I'm going to see if I can hang on to this. I'm willing to take some ownership of SVXY. And my break even would be around, I've got a naked put at 35, a naked put at 55 or 54. My break even would be around $49, and I'll lower the cost basis there. Let's talk dollar. I'm just going to go down the list here. Everyone talking requests and asks. Nice video. Thanks, Daniel. Appreciate that, man. Yeah, I post videos quite a bit on my YouTube channel. I'm posting quite a bit here through the TradingView community as well, and I'm pushing that out on Twitter and YouTube. So if you follow me out there on YouTube or follow me on Twitter, you'll get those videos and notifications. So appreciate that. All right, a dollar index. Had a good discussion this morning on dollar index. I would say just be careful because look, it's August. We still have some data that's coming out this week to kind of wrap up the month, right? Or I'm sorry, wrap up the week. I just don't think this dollar is ready to make that full-on breakout. So if everyone's looking at the dollar index right now compared to the euro dollar, pretty interesting developments. I think, and this is just my thought, if the dollar bounces right here, if the dollar bounces right at the same low that we had last week, I would look at that dollar as a short-term opportunity to get long with a tight stop and see if this wants to just come back in, find this pocket, maybe find this 104 level that keeps getting hit all year. For the last 3, 4, 5 months, 104 has been this kind of inflection point for the dollar. So, like I said, in the short term, if we look at something, I wouldn't just buy the low. I don't like that trade. But if I was watching something shorter term, let me go down to, let's say, let's go to this chart here. Let's go to the DXY. Okay. So let's say something a little bit more aggressive, but if we show signs of support right here and we start to confirm off those lows, if I get price getting back above my moving averages, then I might take a buy trade on the dollar index, put a stop loss below the U-turn. Target 1 would be back to this equal high here, and target 2 would be filling this pocket right here. So in the short term, look at this as far as reward to risk. If I get a nice little upturn, get some confirmation, stop loss about there, target 1 about there, and target 2 about there. So we do have a bonus. We can make more money on the upside than we would on our risk, right? So we'd have about a 1.5 or 2 to 1, or maybe even a 3 to 1 for this trade if we hold these lows. So I'm not calling the bottom here on the dollar. I'm looking to see if we will hold this level, start to get something bullish, take a trade, stop loss below, and then off we go. Now, if this trade is wrong, if I get stopped out here, I may reverse positions. And so let's say I take a mini lot at a dollar pip roughly, okay? And then I reverse this and go like a 0.15 or a 0.20, and I look to see if the dollar, in fact, does break lower than 102, and we're heading down towards a bigger number like 101 or 100, which would be a really nice trend on the dollar. The dollar, for the most part, has been trendless all year. It's been ups and downs and fake outs, and it sucks. Like it to me, it's my least favorite basket. So I've taken very little trades on the dollar this year because it's been so tricky. Right. But I'm just watching, because if we stay in this wedge, which I have drawn here, look at my higher lows, Look at my lower highs, possible crown. That's not it. I don't think that's it. I mean, I can measure it that way, but to me, this is more, if we're going down, high, low, lower high, lower low. That's my symmetry. If we're going down, this dollar's going to break. I'd love to see a full-on breakdown of the dollar. You know, breaking below 100 for the first time since, 2022, I guess. Coming back into levels we haven't seen since 2020, 2021. So if we're going to make a move on the dollar, I'd love to see it. And I still think this, if we're going to see a higher stock market this year, we're going to have to see a weaker dollar. I don't think that there's any way that this dollar stays sideways and this stock market rips to all-time highs. I think if we're going to see all-time highs again or get close to them, that this dollar has to get weaker. Now, I talked about this morning as well. How many of you, let's play a little game. How many of you can tell me what the central bank rates are right now? Because we just had a rate cut last night from New Zealand. Okay. So how about this? Here's the quiz. All right. The quiz is this. Tell me yes or no if the central bank has cut rates this year. All right. I'm going to go in alphabetical order. So the Aussie is the RBA. Did they cut rates this year? Yes or no? Come on. Don't everybody speak at once. Okay. Did the RBA cut rates this year? So I'm putting the currency and the central bank. Pound is the BOE. The JPY is the BOJ. NZD is the RBNZ. And the US is the Fed. Okay. So the Aussie, the RBA, has not touched rates this year. They have not cut rates this year. Nope. So the RBA is still sitting at 4.35%. So they have not cut rates yet. Okay. Bank of Canada for the Canadian dollar. Bank of Canada has cut rates. In fact, they've cut rates twice. And right now, their bank rate is sitting around 4.5%. They were up to 5%. They cut twice. Now they're at 4.5. Okay. So they had a cut back in July, and I think they had a cut back in April or May as well. So we have, I'm just going to mark this. So if the bank is cut, I'm going to put this with a little red line. So the RBA has not cut rates. The BOC has cut rates. Okay. The Swiss National Bank has cut rates. Also, they cut rates twice. So they went from 1.75 to 1.5 now to 1.25. They cut rates. The ECB, they cut rates from 4.5 down to 4.25. They cut rates. The Bank of England cut rates from 5.25 to 5. They cut rates. The BOJ, tricky one. This is why we had the whole carry trade unravel. They raised rates from negative 0.1 to 0.1 to now 0.25. The RBNZ, they just cut rates last night. Okay. Of all the major central banks right here, the RBA hasn't done anything yet, and the Fed hasn't done anything yet. So I'm going to put yellow here. The Fed has not touched rates yet, but what they have said has gotten all these other central banks to act. This is what is so crazy about the Fed. What they say, other central banks take it and run with it. Fed's going to cut rates. Other banks cut rates. Fed's going to raise rates. Other banks raise rates. And a lot of times other banks do it before the Fed. The Fed gets so much free mileage out of talking. So we have the RBA holding steady at 4.35. The Fed for right now holding steady at 5.5. The Fed is going to cut rates more than likely, like high probability we're cutting rates in September, but it keeps going back and forth between 25 basis points or 50 basis points. Last week, Monday, the market was planning in 75 basis points, like this crazy emergency cut. I'm happy that's not happening. Okay. And I'm saying that because this is just the same Fed we've been hearing about over and over again. So I just want you to realize, like, there is monetary policy divergence happening right now. Okay. This is, in a way, one of the only tools that a central bank has, because the rest, you have fiscal spending, whether it's, throwing money at the problem like we tend to do in the US, or you have very little fiscal spending like you have in China. Okay. But I just think this is interesting that the Fed for the whole year has been the most important central bank. What are they going to do? Are they going to cut rates? And as soon as it was sniffed out that the Fed's going to cut rates, all these other central banks started to cut. Okay. because they too, like inflation's been coming down. They don't want to finance at the rates they're at, so they've been cutting rates. The Fed doesn't want to finance where they're at, so they want to cut rates. But hopefully the Fed is cutting rates for the right reasons. We're cutting for inflation purposes and improvements, as opposed to cutting because we have to, we need to, we're now behind the curve. But that's still like it's an inflection point. I don't know. I'm not super optimistic over the next 12 to 16 months that this U.S. market's going to be at all-time highs. I think that we would be. I don't know. I think that around these current levels, we're probably putting in some tops that will last a while in the market. Just my thoughts. Okay. The RBA, that's the Reserve Bank of Australia. Okay. All right. So anyway, central bank stuff, it matters, but it's been interesting to see how there's been policy divergence this year in the central bank world. Okay. Oil. Oil is up around 12% off these lows. I should have some income rolling in on CL this week. Let me check that here. Go to, all right, positions. Perfect. Perfect. Filled. Nice. 290. So that was a win. Yay. And it's 1022. Okay. Okay, one sec. Just have to type a message. And sell put at 5390. There we go. All right. Back to the sesh. Okay, so oil. We had a nice rip off these lows at 72. I have a credit spread that should be expiring this week. Here is put everybody's this one account's fine. So this one is out into the future. This one is near term. Yep. So 72.50 by 72. Right now, I've got about a 99.5% chance this stays in profit for my full credit there on 160 bucks times 8. Not too shabby. And then a 65 by 55. Also in some profit right now. This one's out to November. I'm just hanging on to it. This one should be able to generate, hopefully, this trade 65 by 55 for 61 cents. I'm putting in times 100. That's not right. I should be making like $300 of profit on this one. Let me see. So my naked put is showing that crazy profit target, but what I'm expecting here for 61 cents is in the futures contract should be worth about 300 bucks. All right. So anyway, this week will be good for CL. Oil is steady. We obviously have some noise going on in the Middle East, but I mean, support down here, resistance up here. You know, oil's not ripping to crazy highs. It's pretty stable. It's a combination of tensions in the Middle East and supply and demand, and there's your oil price. It's a little bit messy. Okay. CL, there's your futures contract that I'm in. Natural gas. I like natural gas, but I don't know. I'm being really picky here. I'd rather see natural gas get down to these lows and then trade it longer term. This might be a higher low, but we produce natural gas at such a high clip. I'm just going to hang on to, maybe we come back and revisit 170, 165. Right now, nat gas is probably running hot because it's being used a lot for AC. We had crazy heat throughout the U.S. And I think that, having ACs running 24/7 is probably led to a little bit of an uptick in natural gas. But I don't know. I'm going to wait for this one to maybe revisit lows or look a little bit better structure wise. Gold. All right. Let's zoom in on gold for a second. Now, I'm more of a buyer, holder, dollar cost average into gold as opposed to spot trading. But if you're looking at XAG, if you trade CFDs out there with gold, I do think a pretty low risk trade would be if you look to sell gold here, stop loss just above these highs, and just try to get back down to the same lows. That'd be target 1 and target 2. That's it. Like it would be a very tight stop loss, and even a range there probably offers a 2-to-1, and a range down here offers maybe a 4-to-1. So there's good profit potential on gold. If you're willing to take a little bit of a trade, and if I'm wrong on that trade, if gold all of a sudden is like resistance, 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 and we're just pushing, I'm just not convinced yet. But if we're pushing, I suppose like up this way, and we just kind of wedge and wedge and wedge and wedge. I mean, this is an ascending wedge that, yes, if we break gold to the upside, then absolutely I want to be adding to my longs. But just in case, right here, if we break this structure, stop loss just above, and then see if we just range back down. To me, this looks a little toppy. That's all I'm saying. So for those out there that are trading shorter term gold, I wouldn't mind seeing this. I mean, we're starting to break this little cluster we've had here for the last couple of days. And yeah, I mean, if it was a short-term break, stop above the highs, go after the same lows, that is a pretty good scalp opportunity in the near term. And if it doesn't work, I like the idea of a break, a retest, and then actually getting long and staying long and expecting to move higher, higher, take a stop loss, and then just cancel, replace, and just trail that thing. Okay. All right. So that's gold. Silver, I still like silver. I have a lot of futures positions on in silver. I own SLV. I'm trading, quite a few things in silver. It's still one of my favorite kind of metal plays right now. I like silver more so than gold because number one, it's cheaper. Number two, the symmetry in the measure move is right there towards 35. I'm looking at a percentage move of around 29%, which I like. I would not like to see silver, which still could happen. But I could see silver. I don't know. I mean, I hope that we're going to hold here at 26, and all this is a little correction, and we kind of stabilize in here. I'd like to see silver get back into this area, back above $30, and then we start making that next push into 35. This is my profit target. Okay, I own SLV, and taking this back to $35 is my first target. I have a covered call at 35 that if it gets threatened, I'll probably start to roll it up if I can get more credit for it. But anyway, I'm positioned on silver for a couple things, SLV as well as SI, and just trying to stay out of the way. Okay. So my we're trading at 27.66. If I go to SI, which is the silver futures feed right here, we're trading at 27.70. And I have a 26.25 bull put spread, 26.25 bull put spread, 26 bull put spread. So as long as we stay above 26.25, which is right here, if we stay above this level, then that's out to the end of the month. That's out to near the end of September. We'll see if metals and futures markets stay pretty steady. Bitcoin. So smaller time frame. One thing that you have to remember here, like Bitcoin's not going to 74 without having an uptrending market. We probably have to see the NASDAQ heading higher, the SPY heading higher in order for Bitcoin to go up towards 74, which would break all-time highs. We're just sideways right now, which we had a nice rip. We tapped below that 50,000 mark. We ripped all the way up here towards 64. There's a little bull flag, which I kind of like. And if it stays there, then sure, a little breakout, stop loss below, and see if we can get to all-time highs. So I'm still bullish on Bitcoin. But since we're still hesitating at these highs, let me clone that line right there. So off these highs, just a little bit of a channel to be mindful of. So we have lows, 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 lows. I said this area was a bit of a bear trap, which it seems to be. And then on the upside, it's like, okay, so we go up here, we pause. Do we come back to the same high again? Maybe, right? And there seems to be a lot of volatility, but if we come back up to like 67, 68, are we going to actually fail there, or are we going to actually break and be in some new territory? I hate saying this, but it's like, I bought at 55. I did not buy at 50, right? I had a bunch of other crap going on in the portfolio that, me throwing into Bitcoin was didn't happen. I didn't do it. Plus it was over the weekend, I think. But I would still be willing to say, you know what, at 68 or 72, I'll probably throw in another, buy on Bitcoin until we maybe crack that 100K mark. But it's got to prove it. It's got to prove it. There's no way that, I mean, I could say like, well, Chris, if you're going to buy it at 72, why not just buy it now for 59? Well, because what if at 59 we come back to 50, right? I'd rather buy it down here. What if we came all the way back to this level? What if we actually enter into a downturn in the markets and all of a sudden Bitcoin is going with it, and we have a high to low that's a 75% pullback, which can also
Hey,
happen.
Chris.
Frank,
What's up? How's everything going? Did that credit spread expire?
Yeah, that was yesterday. I was 50 points clear of that. So by the skin of my teeth, grabbed about $1.90 yesterday between my little daily strangle and that bear is a bear call spread in the NDX.
Yeah, 50 points is not very big when you're talking about
it's
NDX.
definitely not. But so I had that chart running yesterday. If I go to the NDX, just look at this thing, by the way. If you look at this feed yesterday, so yesterday, we had a gap higher, right? We had, everyone's all excited about PPI. So this is NDX. So we gap up and we just melt up all day. Now on my chart at 19,000, I had one massive gamma level. And so I had told you this in Discord, like I was just going to put the sell trade and sell the call at 19,000. And I would have gotten more credit for it. I would have probably gotten like $2.50 or $3 for it, which could have been like break even or better, because if I collected, actually, you know what? That may not be true at all, because if I did a 19,000 by, let's say 1910, I think that's what I did. Yeah, I think it was a 1910. So that's a $10 spread, and I collected, let's say I was going to collect $3. Well, if this thing finished yesterday at 1906, what would I have lost? I would have lost the $3 that I collected and been down another $3. So I would have lost $300 yesterday had I done the 19,000. So I pushed it out further, and I just thought, how to make $100? Can I make $100? So I did the 1960. So 19060 by 19070, collected $1.30, and it didn't threaten my positions. Cash settled, so it worked out okay. But it was close. I'm not gonna lie, dude. It was close, and it drifted up there all day. So
yeah,
whatever. It still worked. I'll take it. Move on.
Well,
all right.
What are you thinking about in terms of inflation numbers coming in? CPI year over year was lower, but taking a look at core came in as expected. Month over month came in as expected, and both were expected to be higher than last month. So what was your take on this, I guess, result?
Yeah, I think my take is I think we're in the sticky camp again, right? You go back to July last year, we're in the same camp. 2.9 is not an impressive trend past anything we've had over the last year. Like, granted, we're not spiking up, but I don't see this as a reason for the market to get overly excited. The first thing I checked when I saw the newsprint this morning is I looked at the Fed watch tool, and I saw that this jumped back to now the camp of, okay, Fed's likely going to cut, but it's no longer looking like a 50 basis points cut. Now the Fed's going to cut only by 25 basis points, let the data trickle in month to month. And again, this is subject to change. This could change after Jackson Hole. I have no idea. Does the market take a turn for the worse? I don't know. But for right now, if things just stay somewhat calm, then yeah, I think the Fed just cuts by 25 basis points and we move on month to month. And it's going to be agonizingly frustrating for traders that are like wanting a big rip or wanting a big fall or whatever they're positioned for. But something tells me, Frank, that we might just be going sideways for a second, and might just take some time to settle in. So I did take a couple of trades. So since we talked on Monday, I'd put a couple of trades in on, I've got a couple SPY trades in. So I did one today that is a 535. Where's my chart at here? Let me go back to the SPY. So we're having a nice little sell-off on the SPY. I'm targeting this 535. So this is what I did. I did a 535 long put. I did this out at the end of the month, by the way. So I'm giving myself a little bit of time. I went out of the money, so it wasn't super expensive. I did a 535 long put. And against that, I sold a 525 short put. Okay, so it's a debit spread. but it's
Gotcha.
allowing me to hopefully capture some. I mean, if we move towards that 535 handle, my strike will probably be trading for like $6 or $7. I only paid $4.50 for it, so it covers both sides of the move, because the other side I did a 550 long call by 565 short call. And that's also a debit spread. So I went out of the money on each one. I'm just going to look to see if price actually wants to go somewhere. This week, we've already moved about $13, $13 or $14. That's the average trading range for the week. I don't see us necessarily going too much higher, too much lower. I could see us going lower and filling a gap, but I don't see us necessarily stretching too much higher for the week. I think it's, kind of absent of a couple of news events. I mean, yesterday was a big directional day. CPI is having I would say, not an impressive reaction. I mean, there's certainly some price action that's suggesting this thing's trying to go a little bit lower. I look at this right here, like all this support just broke in the last 5 minutes. So either go ahead. Sorry.
If you take a look at the 4-hour chart on the NAS,
Okay.
So we had this. What I was afraid of was this breakout of this longer term trend line. So we break out of this pattern, and what I was afraid of seeing was a false breakout, and we come back down, test the lows again.
Yep.
But here's the problem we run into with this CPI report is that, so year over year did come in lower, but the problem is everything else stayed elevated. PPI was lower, but overall I'd say mixed results. So we're still kind of in that sticky camp.
Yep.
So it really does come down to labor as well. Like, people are talking about it's more labor dependent, but I think now more than ever, if we're going to have stubborn inflation levels, NFP, wage growth, and unemployment rate are all going to have to show some improvement. Otherwise, this CPI really does matter. Inflation really does matter. I don't think we should shift focus to one or the other, but I'm very I guess confident in the fact that both go hand in hand, and we're running into this sort of stagflation issue.
Yep.
Just depending on the last most recent data we've seen from jobs, the most recent data we've seen from inflation, this is raising that question again. And we've successfully broken out of this trend line, which is, I guess, a good sign for the bulls. But every time we tend to make a higher high, if you're looking at the way this market has been traded intraday, it comes back and forms lower lows. So here, I think I'm with you. I would say that if you wanted to take a trade, you would sell options, but on the upside. So if you wanted to do what you did like yesterday,
Broken wing butterflies.
Broken wing butterfly.
Yeah.
So
Right
collect
there,
premium
right there. Yep.
on an upside cap, but I think this also has to be pretty short term, because yesterday you got very close.
I know it was a zero DT. I mean, look, I gave it plenty of room. Like, when I took the trade, it was trading like 18.7, 18.6. It was already up 2.5% for the day, and I'm like, I could have cut it really close and taken the 19,000 handle off that gamma level and taken in $3 of credit, which at first would have been like, sweet, I'm gonna make $300 today. But it threatened that position, and that gamma level did get hit, which is, from my experience and using that software, I go a little bit higher. I was willing to sacrifice what looked good at $300 for the day to, I'll take $130, and I was out of the way, because we needed to have a 3+% day. And I'm not saying that can't happen. It has happened. We had, 2.5%, 3% rips over the last couple of weeks since recovery. But take a look. So you mentioned the 4-hour time frame on the NAS. I mean, we came right back to the 200 EMA. I mean, the one thing that did happen is, I know this isn't your typical like daily and weekly, but we did cross into a sell zone on the 4-hour time frame. And if you look at this candle, I mean, this candle right there from that big sell-off we had on Thursday of this was FOMC, and then this is Thursday's just complete like backpedaling of that price action. So Thursday last week, like, this to me is where the big sell pocket is right now, in my opinion. And we're right to it. So I still have a bear trap on the NQ. As long as we stay, this is by maybe the end of the month. I'll double check the expiration. But if the NQ is below 19.1, I've got a $5,000 profit trap on the futures contract. So I mean, I obviously hope it does that, because otherwise that's a wash of a trade. But I like the broken wings up here. I was actually going to look at maybe doing an out of the money. If I just do an out of the money put, like if I buy a put, let me see what it's going to cost me. Like NQ, if we get to like 18.1, let me see what this would cost. If I did an out of the money, let's go NQ. NQ, let's look at something here for a trade. If I went to, I mean, realistically, if we start to tumble from Jackson Hole into September, September effect historically is a bad month for stocks. So, I mean, I probably want to go out to like the 30th. 18.1, I mean, that's a pretty expensive trade, right? This would be, I mean, this is going to cost me 10 grand to take the trade. So, I mean, if I lose on the trade, I'm going to lose 4 grand. That's not great. Let me go. It's 221 times 50. 221 times 50. Yeah, I mean, that's not great. So, I mean, if I do, I'm not taking this trade, but I'm just going to look at the numbers. Yeah, I mean, I'm not going to take that trade as is. I would consider, you know, an 18.1 by 18,000. I mean, that takes it down where it's like I can make, that's 100 points wide, dude. I mean, if I paid 1750, this isn't too bad. I mean, I could pay 875 for a trade that would pay me if I get 100 points. Okay, so 100 points minus the 1750. So I get 8250 times 50. I mean, I could make 4 grand on a trade that only cost me about $800 to take the trade, right? Yeah, so I mean, a trade that's less than 1% risk for a trade that pays about 2% profit, like that's not a bad trade. But again, I've got to get it right with the timing, and this is the downside about selling the 18,000. Like I'm basically telling the trade this: you have to be below 18,000 by the end of September, because if we're not, let's say that we do this. Let's say that I'm right directionally, and this thing comes all the way down here to retest the low. Well, because I have that sell side of the trade, if this thing dips back up, I'm still going to lose on the trade, and I got the direction right. So, I mean, it's just, I'd love to say that's the trade that I want to take. But if I put the sell side into it and I try to save the cost, I don't know. I mean, maybe it just has to sit there and I just need to eat it and say, look, it's a hedge, right? It's a hedge. So maybe that's not a bad play. But if I did a trade, I don't know, man. I mean, what else do we have in September? So tomorrow, by the way,
when is that meeting in September?
The September meeting is the 18th for the Fed.
Okay.
Yeah.
So that means, I mean, you were talking about a sideways market.
Yep.
Do you think that we're going to be kind of more the same? Like we're going to be having these, I don't know, 2% up days and 1% down days? Or do you think we're going to move before we get to that decision, before the Fed is likely to cut? Because that could be, I don't know, that if you're looking towards the end of September, that means you only have a few days after their decision for your thing to make a move. But
this is the first thing that I think about when you said, what do you think's going to happen? If you watch Squid Games, did you see that red light, green light in like whatever episode it was? That's what I feel like the market's doing right now. The market is like wanting to go, not sure what to do. It's like, what data can we go on? Is it good news or bad news? I mean, like we said this last week, after the dump that we just saw, I don't think that the market is going to move anywhere on its own. I think the market's like tomorrow, for example, what do we have? We have unemployment claims and we have retail sales. That is still enough out there, because I think the inflation stuff, right? The inflation stuff is like, okay, it's not bad, but it's not getting better. But the Fed's still going to cut rates. So it's not like the Fed's going to raise rates all of a sudden. It's like, I don't think the Fed's going to say, we're not doing anything in September. If the Fed doesn't cut rates in September, the market's going to hate it, right? So if the Fed doesn't cut rates, the market's going to dump, I think. If the Fed cuts rates by 25 basis points, the market's probably not super excited about that either. And then the Fed will continue to be like very data dependent. The one thing the Fed probably is still very focused on, now that employment is becoming more and more sensitive, they want to see an improvement in the labor market, but they're still trying to keep inflation low and tamed. And in a way, I mean, we've seen the language out of Jerome Powell change a little bit, where when he said we don't need to see inflation down to 2% in order to cut. When he said that, that essentially allowed the Fed to be like, okay, we're seeing this 3% inflation print over and over again, and we're still going to cut. We can still be less restrictive, which is fine. But now tomorrow we have retail sales, okay, which I think for the U.S. will matter. So retail sales means strength of the consumer. Are we still buying? Are we still consuming? That's 70% of our GDP. Unemployment claims at 236. That's higher than the previous print. If we look at these numbers, you know, we've been pretty steady in here in the 200s, right? And so I know it's not non-farm, which gives you average earnings and unemployment rate and a jobs number, but this was also the big reason that last Thursday the market actually got excited because all of a sudden it was like a lower than expected unemployment claims. So I just think there's a lot of sensitivity, man. What's that?
It was an overreaction.
I think so too. It was more like it just was buy the low, you know, accept the discount as it was, and probably just cover your butt on some of those like nasty drawdowns that people were in. I mean, if you think about it, how many stocks from look at like any, I mean, just take Mag 7 for a second. If you take any stock in Apple, okay, what did Apple do? Just from this trade from high to low. So we go from 237 down to 195. I'm just going to put a quick fib on this. I would venture to say that almost every Mag 7 stock from last week has recovered over 50% from that fall. And so I think that's why it didn't matter what the news was last week. It was going to be a buy to kind of find equilibrium. So there's your high, there's your low. We're right around that 61%. Now, that doesn't mean anything for a trade. I'm just saying we pulled back at least halfway. So anybody that's been stuck or anybody that added to this, like they you know, shorts recovered, their collars recovered, like all sorts of option trades. I'm sure just equilibrium was a good thing versus just a straight up dump. Amazon, not quite. We're close, but not quite. Amazon, this one has had a pretty nasty spill. Amazon's around the 38% pullback. So I think I mean, I still like Amazon long term, but we're at 38%, not 50. But that one had an extra dump because the market crushed Amazon during earnings. Google, I take that back. I guess I'm wrong. Google has not pulled back 50%, which means I still think there's more downside. Look at Google today. We're red on the day. We haven't even come close to pulling back halfway. So, all right.
Meta's at the highs, I'm sure.
Meta's near the highs. Yep. Google's there. Meta's near the highs. Yep. So that was no problem recovery wise. Microsoft still not close to the highs. Netflix, that one recovered. Nvidia, close. This one's going to be close. It did though. It got halfway back. Okay. By the way, if Nvidia cracks these highs, tell me, do you know what the percentage is, Frank? If from this low that we had on that Monday open, if Nvidia cracks the highs, what is that percent?
I don't know.
50%. Is that freaking crazy, dude? That we had a 35% haircut on Nvidia and it'd have to go 50+% to rally to get back to all-time highs. But it could. Like, unbelievable volatility for a stock that's one of the top 5, top 3, was top 1, which I did say this. I did say that it'd be funny if Nvidia hits number 1 in the world and then the market tops. Kind of happened. But
yeah,
I didn't call it.
If we go back to the highs though, that's not a good sign, I don't think.
No, I don't think so either. I think that's a good time to short it, to be honest. I think in the near term, like I would possibly short Nvidia because, look, Nvidia. Here's what I think. Nvidia is going to stay right here until the end of August because we have earnings at the end of August. I don't think Nvidia is going to be near the highs or near the lows. I think it's going to stay right here. So guess what? You and I are going to be doing that last week of August on the 28th when we have earnings, looking to see if Nvidia wants to go somewhere. Maybe it does. Maybe it doesn't. You know. So like. Right now, I mean, I don't know if I could. I may be able to take this trade prior to earnings, but if I did an iron condor, I guess I'll look and see. Let's see it. Let's see what it looks like. So if I were to sell a 140 and sell a 90, do I get any premium for that? Let's find out. So Nvidia earnings is the 28th. So we have 28th is Wednesday. So I'd probably have to cut this expiration back through Jackson Hole, which would be the 23rd. So if I were to sell the 140 and sell the 90, IV is still 67. So if I sell the 90, oh my gosh, dude, 13 cents. Never mind. 140, 10 cents. Frank, for an undefined risk trade on Nvidia that ties up $10,000 in buying power, I can make $22 of profit.
No. No.
I'd say no thanks on that trade. That's ridiculous, dude. Like even with an IV at 67, this trade is garbage. So never mind. So an Iron Condor is going to be even worse than that. No thanks. So it is what it is. But I'm wondering
I
if
just think that if we go back to the highs, I don't know, that is a short opportunity. I think the investors are expecting the Fed to do too much. I think they're just expecting them to come in and save us. Like, to their point, they usually do, but I don't know.
but
50 basis
it's not in a good
cut.
way, dude. Not in a good. Not in a good way. If the Fed were to cut more, this go around, if the Fed cuts more, I think, and I've said this, I think my concern is that if the Fed were to cut more, the market doesn't respond the way it always does, right? When the Fed cuts, the market usually responds pretty favorably, and this might be the time that the market doesn't care. It's like it's not good enough because the Fed is cutting with all these other concerns. Inflation's still sticky. They're being a little bit more, they're able to cut a little bit, but like if consumption is down, employment's looking softer. I mean, they're cutting for the wrong reasons. And I'm telling you, man, if you tip the scales like 51% that the market thinks we're going into recession, the market's going to price it in before we actually hit it. Before the headlines actually read, we're in a recession. Before we have 2 quarters of GDP, we're in a recession. The market's going to freaking dump. Like that's the beautiful thing about the market is like 6 to 8 months out, it's going to price in whatever it thinks the new momentum is. And so if the market's sensing recession, we're going to see it in price. So right now it's like, that's what I'm saying. It's like red light, green light, where the market's not quite sure. Maybe there's enough data to kind of keep things stable, but earnings season is wrapping up here for Q2. All we have is Jackson Hole. We go into a rate cut cycle for September. Seasonality wise, do we expect a lot of good things to happen here? Seasonality wise, out of the month to month? Not really, right? August and September usually are very bad for the stock market. So SPX here, okay. September and October are both like the roughest months. So I mean, you could argue like go hibernate for the next 45 to 60 days. Hope the market doesn't kill itself and fall off a cliff. And if you survive September, October, then maybe we can still have a rally by the end of the year. But I think the question is like August to me, just like it said in Forex, August to me feels like it's a transition month. And I want to open up a fresh workspace because my chart's getting a little messy. But rather than us sitting here and calling the top, okay, I think if you're going to be a seller, okay, the cleanest sell trade right now on these markets would be if the SPY breaks below that trend line, you could be a seller. Okay, if you wanted to be a little bit more aggressive, I would say if the SPY came back to this same high right here. So this area to me is where I'm looking to sell. I'm looking to sell the SPY in here to kind of catch a top and see if I can get this back down, not necessarily all the way back down to the lows, but maybe a up and down and then just I don't know, just noise, So that's one way.
Yeah.
And then the other trend line that we looked at would be this one. And you can't make a decision on this because if we break this trend line, does this actually mean we're going higher? Maybe.
Not necessarily.
It's too aggressive, dude. Like you can't look at this and be like, it's going up. It's like it doesn't mean that at all because we could just come back to this candle and this could be high to low, pull back into balance, and then we have another dump lower, and all of a sudden this becomes a channel. So let's take a trip back to 2022. 2022 was this. 2022 is that before we put in a bottom. So is this what we deal with? Is we had our big like 10% sell off, and then the market kind of organizes additional like you have some nice pullbacks, you have some nice falls, but look at that volatility, right? If you go up 7, 8, 9% and then fall 10%, go up another 7, 8, 9%, fall 10%, we might have a controlled maybe because at this point like the JPY stuff is unraveled. I don't think the volatility would go up to 65 again. I mean 2022, did the VIX ever get above 40? Not once. Even though that was a 25 to 35% correction in the stock market between the S&P and the NASDAQ, we were down a ton in 2022, but the VIX never got over 40. So we could have like controlled selling, maybe a bit of a bear slide here the next couple months. But to me, the tell is if we can't get above 552, okay, if we can't get above 552, I'm much rather looking to sell. But I don't know if we're taking out lows either, dude. That's it. We don't know that, right? We don't know that. So I'm just trying to keep the
No,
charts a little cleaner because I've got crap all over the place. I realize that I can see through the charts, but I get it. Like it looks messy.
we
So
don't know.
we don't
I
know, and
mean,
and
yeah, we
nobody
don't know,
does.
but I mean, I still have a slight hunch that we will take out the lows, and I think that
Yeah, I mean, I hope we do. Well, I don't want to say that. I hope we don't, but I think we should.
I
I think
think
we
that
should.
we're going to get to a range on the S&P and the Nas where we think where investors are going to get comfortable again, and that's when everything's going to fall. So we
Good point.
break this level, we come up here, we close above, we're looking good, nearing the highs. I think it's going to get ridiculous where we're going to, at this point, I think it's going to get to that area where we're like, okay, so we're going to test the all-time highs again, and then we don't, and then we test those lows. But honestly, we are talking about selling options, but I think that volatility is going to pick up, even if the overall trend is kind of 2% one way or the other after some big moves. I think intraday or 1 day out or 1 week out, you're going to get some big moves. So I don't know. The other week I bought puts way out of the money that really worked out. So why not just keep doing that? Why not look for upside
Hmm.
on, on slow, steady gains or rips higher,
Yep.
as well as looking at out of the money puts or short calls that you think are just going to work out, because I know that my puts are expiring worthless. I have out of the money puts that I get for 4 cents, 10 cents, whatever.
Hmm.
Um, they can change drastically. Even if the market comes down like 1%, 2%, those 4 cents will be worth like 7 to 10 cents or 15 cents or whatever, which would be nice. Act as a little hedge. But why not take those small positions if we're worried about this sort of move, instead of just simply selling uh, option positions that you have?
Yeah, I think, I mean, it depends on how active and how short term. I mean, if you're too short term, you're look, I look at hedges, or if you're kind of playing like the slow upside but the fast downside. I mean, there's not going to be
Yeah,
winners all
that's
across
what
the
it is.
board, right? Like you're going to sacrifice some profit somewhere. You're going to sacrifice. So either you win on the upside and you sacrifice those cheap hedges, or you win on the downside and you sacrifice maybe a little bit of the defense in your portfolio. But it's just, it depends on how active you want to be. I mean, I think this. I'm just thinking more and more about, I want to get long in a futures contract just because it's leveraged, and I just think, like, let's go to ES for a second. I mean, part of me right now, it's like, part of me believes that we are going to get back to the low before the end of the year. And so that futures feed, for example, I mean, now that I see this on the 4 hour time frame, that looks pretty good, dude. I mean, if we're going to respond to some technicals, I almost think that the ES feed is easier to read than the SPY in the SPX, just because we have gaps and intraday stuff. But like I said, this is the big inefficiency that the market might come and find, but that's where the resistance to me is sitting. And it just so happens to be right at the backside of that trend line, where I wouldn't mind getting long a put towards that low. Now, to go out, this is the hard part, is how much time do I want to pay for? If I said that the futures feed, down to like 51.90, let's look at ES out to 51.90. Okay. So it's going to cost money. I
It
think
could
that
be like a week out if we're talking about big sell-offs.
I can't do that, dude. Like, I can't go out a week and feel confident about that trade. Like, it's way out of the money and it's dirt cheap. But if I went out a week and all price did was this, if all price did was this for the next week, that thing is worthless. Now, it won't cost anything, but it'll be a loss. Like, I'll look at it, right? So let's go to the 20. Let's see, it's going to be the 23rd on Friday, right? Next week. So if I go out to the 23rd, and I'm going to see if we're going to retest. I'm not even going to say the wick low. Okay, I'm not going to say the wick low that was Sunday night. This is Monday's morning's open. But if we get back to like 51.90, let's take a look at that. So we'll go out a week, 51.90. If I buy a put 51.90. So, excuse me, on a futures contract, I can buy a put for dirt cheap, but I'm going out to an expiration that, I mean, it's a 6 delta. That price would have to drop pretty aggressively. And look, the upside here is ridiculous. I can make a ton of money on this trade. The problem is if I don't time it well enough, I'm just losing. All right. So I don't know, man. I guess I'm more interested in what have we seen. If we're going to see a bit of a down spill in the market, what have we typically seen? It's usually like something where, summertime, like July, August, the market starts to top over. August and September starts to get a little bit worse. September, October, it really gets kind of bad. October's been like the pivotal month. If we're going to see a bull market, it's like end of October, early November. The last couple of years, it's been that type of seasonality where October is not like a great month. Last year, when the market ripped like crazy, it was like end of the month into November. So I don't know, man. I think I'm willing to pay a little bit more to buy myself the time to still have the trade that like gives me a chance, because look, I'll pay for the time, but it gives me just a bigger window to be right. I think so. Let me see how much more expensive it is. But if I went to, like, this is not a bad trade, Frank. Like, okay, so $5 is going to cost you about $250. So 510. So for $255, you could turn that conceivably into, let's say that by next week, okay? By next week, you're trading at the money, okay? So if you're at the money, you're going to turn a $5 debit into a $50 credit. So you just went from risking $250 to making $2,500 if we get to your price. So as far as the reward to risk, it's a huge reward to risk because it's 10-1. It's freaking awesome. But I'm not comfortable going out only a week. There's too much potential noise of like the market just kind of, look, the market got punched in the mouth, right? So this huge drop and this little recovery, and we're back around 50%. I could just see the market just not wanting to do anything. It doesn't know what it wants to do. It doesn't know if it's safe to go up. It doesn't know if it's going to crash. I think the market just stays here and probably drives everybody crazy, I think.
Right. So we do have to go, but I did want to say,
okay.
I wanted to say something about the futures. If you want to go like short term, you could do like a weekly broken wing butterfly up at this, I guess, 200 simple moving average, 200 day.
Okay.
You collect premium during that week, and if it doesn't get up there, you can go next week, because maybe this is where we top out, and if it closes there, you get,
that's
that
not a
payout.
bad.
But
yeah, that's not a bad trade. Give me a pin price on that. 55.50. Would that be okay?
I'll give. How about let's talk about it after?
Yeah. Okay.
And let's transition so Nick Phillips can get on.
Okay.
But I'll send you over what I'm looking at.
All right, sounds good. All right, Nick, you got the show. Thanks, Frank.
Yep.
Talk to you in a second.
Thank you.
Bye.
See y'all.
Attention A1 Trading Show fans. If you're interested in getting free access to the Edge Finder or our premium trade alerts, listen up. For a limited time, our show's partnered broker 8cap is giving out free access to our products when you sign up for a new trading account with them. If you already have a broker, you may want to consider switching to 8cap because of their low trading costs, a wide range of trading assets, and their amazing customer support. If you'd like to get access to our software and Discord server for free, click the link being dropped in the chat right now and ask one of our team members for more information. Don't miss your chance for free products and an award-winning broker. Now, back to the A1 Trading Show.
Good morning. Good morning. Welcome to this segment of the A1 Trading Show. It's been a bit of a crazy week for me personally in the market. It's been a bit of a whirlwind week. I trade specific pieces of red folder news from all the major currencies. So let's just take a look at kind of how my week has been. It has been not much sleep. There hasn't been much room for sleep, I should say. So we started off with Australian dollar wage prices. That piece that had dropped on Monday during Asia session. So that was about 9:15 my time. And then a few hours later, normally I'd be going to bed around this time. A few hours later, we had pound employment change information. So we had Asia session, then London session. didn't trade US PPI on Tuesday. I tend to not trade US PPI, so I didn't have anything to trade during New York yesterday. But I also had Asia session. Excuse me. All of a sudden got a tickle in my throat. Asia session last night, followed by London session this morning, and then New York session this morning. And then we have Asia session also tonight. Tokyo live for odd employment change. London session tomorrow morning. New York session tomorrow morning. And then I'm off. And I won't be trading again for another year. I'm just kidding. But this week is it's a marathon. We're having to treat our sleep like it's a scheduled routine, but a broken scheduled routine of we got to get 3 hours here, wake up, get 3 more hours, wake up, and survive for the day on that. Last night, I ended up not getting much at all because I was trying to trade some of the CPI momentum and ended up waiting around for about 2 hours after the CPI data dropped and got one decent little trade out of it, but nothing major. Anyways, whirlwind, absolutely crazy week. So let's dive in here real quick before we hit the charts. Let's dive in here to some of the data. I'm going to work backwards through the data that I've been paying attention to this week. So starting today with the CPI information. Let me make sure you guys can see this. Yes, you can. Okay. Starting today with the CPI, mostly as expected. The actual figure here coming out right in line with the forecast for core month over month and core year over year and headline month over month. The only number not coming out at the forecast would be the headline year over year. However, it did not break outside of the bank range low figure, so there really wasn't a surprise to the markets here. So CPI was a no trade for us, as expected, no identifiable edge, and we can see the dollar reaction for like first hour afterwards is pretty mixed. This is a pretty mixed reaction. You have the market initially spiking down, then spiking up in the first 5 minutes, and then spiking down, and then spiking up, and then ultimately finding some downward movement. But this first hour ahead of New York Open, just markets absolutely unsure of what to do with that CPI information. Okay, moving on to this earlier this morning, pound CPI. Pound CPI came out, you can see it right across the board, slightly lower than forecasted for most of these figures, but not outside of these bank range lows. We did get CPI services month over month and year over year that came out outside of these lows. But of all the data that we got out of the pound this morning, the services month over month and year over year were sort of the least important. We did see a bit of an interesting reaction from the pound this morning as well. That data hit the. We had an initial 5-minute closure to the downside, but since then we've really not continued that move. So this just goes to read sort of my opinion of this, which is what led me to ultimately deciding to walk away. I grabbed a small trade somewhere here this morning, but I ultimately ended up walking away with not much in profit because I did not expect a sustained downside move out of this data this morning. Most of it was in range, just slightly lower than the average forecast. And I didn't have much conviction the services was going to really take hold of the market. So small trade there, but nothing major. All right, walking back before that, what did we have? Let me see. NZD rate cut, which I don't believe I have anything in this commentary section on the rate cuts. Over here to this follow-up. So the Reserve Bank of New Zealand surprised the markets with a rate cut yesterday. I say surprised. The money markets were priced at about 75% chance of a cut. The forecast that we were getting across all major news outlets was a hold. So we got a price cut. The biggest change for yesterday, aside from the cut was a massive surprise for New Zealand. But these over-the-counter rates, the interest rate projections also changed for year end. So back in May, we had substantially different interest rate projections for the rest of this year and next year. Let me actually see if I can pull that up real quick. Give me 1 second here. OCR dates, past OCR announcements. Let's go to May. May 22nd. May 22nd. Okay, here we go. So let's do a little bit of comparing and contrasting, shall we? I believe we got to go to basically the back of the book here. Appendices, page 50. All right, so in May, the forecast for the rest of the year was no cuts, actually hikes pricing in to the outlook for the rest of the year. So by the end of this year, back in May, the Reserve Bank of New Zealand was projecting 5.7 as their interest rate. Now they are projecting 4.9. So almost a whole percent in the opposite direction, a very drastic shift in sentiment from the Reserve Bank of New Zealand. Beyond that, 2025, by year end, they were projecting 3.8 at this meeting. At the last meeting, they're projecting 5.1 by the end of 2025. So we did not, the RBNZ was not projecting any rate cuts as of May until the latter half of 2025. We were going to get some hikes and then some gradual cuts at the beginning of next year. But the cuts themselves, let me rephrase that. The markets were not expecting any cuts from our current levels. The Reserve Bank of New Zealand was not expecting any cuts from the current levels until September of next year. They were going to raise a little bit, hold, raise, start cuts at the beginning of 2025, ultimately leading us to below our current standing, or what was our current standing, the latter half of next year. That changed drastically with this one print. This today or yesterday's RBNZ was last night, Tuesday night. Drastic change. We are now seeing a 3 handle on the interest rate expectation for 2025. Now, that begs to the question of whether or not RBNZ is getting it drastically right or drastically wrong every time. This is a very drastic change, a very solid shift out of the New Zealand dollar or the Reserve Bank of New Zealand for their future outlook. So for me, I'm going to be looking at New Zealand dollar weakness for the foreseeable future. It's going to be a bit of a challenge trading it on the futures contracts because it's paired up against the US dollar, which I'm also seeing as potentially weak. So should be interesting. I think some of that collective dovishness should cancel out. It should sort of bring some neutrality to the pair, which will make it a decent opportunity for me anyways to trade off of any economic data, whether that's in New Zealand economic data or US economic data. Those two currencies both being weak, is that any kind of their in my opinion, the neutrality going into any data is going to be present. So it makes trading upward surprises easy and downward surprises easy. All right, moving on. before the NZD cuts, we had GBP unemployment or employment data, which was again a mixed bag. So, oh, that's CPI. So a mixed bag here on unemployment. The unemployment rate came out lower than the lower than the forecast. So a big surprise on unemployment rate and employment change. However, the weekly earnings, it didn't surprise to the downside. It came out as expected and lower than the forecast, not lower than the expectation, but just red enough to make me not really like it, especially due to the fact that the ONS has made it clear since last winter, that their statistical data collecting methods, they faced some challenges last fall and about October. A bunch of people or a bunch of the members that they polled for the survey did not respond. So they started to create new methods of collecting the data and have essentially, communicated that that data cannot be relied upon until about November this year. And weekly earnings is not affected by that data at all. So when it comes to trading pound employment data right now, we're really putting a lot more weight behind the earnings portion of the data set, as opposed to the employment change and the unemployment rate, even though this pointed towards pound strength with a pretty substantial surprise. My conviction for trading it was low because of the mixed nature that the earnings presented, and the sort of uncredibility of the unemployment rate and the employment change itself. So, bit of a mixed bag, no trade there. Then wage prices, you can guess it. It was not an enchilada for us this week. Mixed bag. Wage, just looking at even at business conditions, just looking at wage price index quarter over quarter and year over year, zero surprise. It came out the quarter over quarter hit the low of the range. The year over year hit sort of right at the previous, right near the middle of the range, just above the forecast. So we have one piece of data pointing us towards a bit of a weaker Australian dollar and one bit of data pointing us to a bit of stronger Australian dollar. No trade. So far we've had mixed data, a dovish NZD, decent opportunity situation, mostly as expected pound CPI and mostly as expected USD CPI. So it's been a lot of data and a lot of nothing data this week. So it's made for a very interesting week. Let's jump into some charts here and see what's going on with the Doxy DXY for those of you that it drives crazy when I say Doxy. Down on the day, the CPI catalyst not really, I guess kind of only coming back into play, but is this move being faded right now? Sort of, kind of. I'm a dollar bear right now, so I am just specifically looking for reasons to sell it more often than I'm looking to buy it currently. There are analysts calling for emergency rate cuts out of the economy right now, and this was before the CPI print. What we were seeing some last week and some the week before with a bunch of the risk-off sentiment hitting the markets was people getting scared, investors calling for surprise rate cuts, and then markets beginning to send a lot heavier rate cut behavior out of the Fed for the year than we've seen pretty much for the last 3 months. So big dollar bear right now. It's just a matter of finding good entries for me. I am not interested in getting involved until I have a piece of data that points me in a solid direction. Let's back out here real quick and just take an overall look. We are at a pretty decent little level of support here where price rebounded back in March, kind of bounced off of this area, pushed up into some of these, tried to tap into these 107 highs. So definitely an interesting area for price to potentially react from. We could see Let's see what next week is bringing. We'll go the next 2 weeks. Okay, so next week is FOMC meeting minutes. Probably going to see some volatility out of that. I don't know if we'll see any sustained moves from that. Some PMIs, unemployment information, Jackson Hole Symposium next weekend. The following week, really the only thing that's going to matter, not the only thing that's going to matter per se, but the only thing I really care about the following week is going to be PCE. So I could totally see the next 2 weeks out of the Doxy being maybe some relief. Like next week we get some relief here, and then the next week maybe some more relief here, and then we follow it up. Let's go to the next 2 weeks. What do we have? NFP week, ISM services PMI, manufacturing PMI. So I can see maybe with some continued weakness out of the dollar going into September, I could see the first week of September, kind of continuing this downward move. Yeah, so can't 100% predict that, but I can definitely see a little bit of a relief rally. It would most likely look like a bunch of consolidation on, the 4-hour time frame. All right, New Zealand dollar weakness after the rate decision. So this was the 4-hour candle from the rate cut plus the OCR projections. I think we are I don't want to say we're not stretched far enough to the downside for data. Let me back up. That is exactly what I think. My problem with this is timing. I think we still have more downside out of New Zealand dollar based off of their projections and the surprise cut. Governor Orr mentioned a couple times during the press conference last night that they are approaching monetary policy with caution, that their future decisions are going to be met with caution. However, that statement is sort of negated by the fact that they're calling for this many cuts by year end of next year. That doesn't seem cautious to me. That's the exact opposite of what seems like a much more cautious approach as of their May projections. So the May projections seem more cautious because they're holding higher rates. They're even raising rates slightly. And then going into next year, they're slowly cutting down. We don't even leave a 5 handle next year per the May rates. So even though Governor Orr is saying they're going to be approaching it cautiously, their projections are telling a little bit of a different story here. So we'll have to see. I do believe there's some more downside potential. It's just a matter of, is it going to go down from here, or are we going to see a little bit more of a relief rally here out of the New Zealand dollar before ultimately going off from some of these 6-1, 615 areas? That's going to be the challenge for navigating any potential scenarios out of New Zealand dollar. Again, I tend to mostly just trade off of data catalyst. So I'll be looking for opportunities to sell New Zealand dollar based on US data and New Zealand data. All right. All right, so I think I'm gonna move to some Q&A now. If you guys have any questions, go ahead and send them through as we wrap up the show here. Let's see. Emmanuel said, could gold retrace back to previous high? Am in long position. Just as a blanket statement here, the markets can do anything at any time. Just for a drastic example, let's say a brand new war pops off today, like something incredibly scary happens in the world right now. Two major nuclear superpowers go to war. Totally unpredictable. Nobody can foresee that coming. It just happens. It's a very quick, scary thing that the markets could begin pricing in a risk-off sentiment towards, in which case you should see gold fly to the upside, which would put it at touching your, these most recent highs. Now, as far as whether or not going to, it's kind of anybody's guess here. You said you're in a long position. I don't know where you got in long from. If you want to follow up with where you got in from, this is an interesting pattern. I tend to like this pattern as a reversal pattern. You see this bit of a consolidation area creates a sort of a double top, sort of a triple top situation here. And then it's got this support level. That support level has been broken to the downside. And now it's sort of like you got to ask yourself, okay, well, where's the next area of stability, like real stability out of gold? I would say in this area where we have all this bottom. So just mark up a little support zone here. Again, it just depends on where you're long from. I could totally see price continuing its fall down into here. I could see it doing this as well. Coming back in, retesting this area, previous support as a new resistance, and then tapping back down into this area, previous support. Is it going to act as support again? Don't really know, but we'll find out. But yeah, as far as staying in this, if you got in somewhere up here and you're in a long position, based on the technicals for me, again, it all depends on how long you're trying to hold. I mean, we're at all-time highs on gold. So trying to buy into highs, not ideal, right? You theoretically, if you're in long positions, the idea is to be in as low as you can and to sell as high as you can. And if you're buying at the highs, it's kind of a tough call to say that that's as low as you could have gotten in. Let's drop back to the 4-hour. So the way that I tend to read price action is like a story, right? So originally, price tapped into this area in the middle of July, fell away heavy from this area towards the end of July, tapped back in the beginning of August, fell away heavy first week of August, rallied back up last week and the beginning of this week, and has retouched these highs, tried to touch this or tried to tap into this area, failed, tried to tap into this area, failed, another big strong push into this area, immediately rejected, and then a heavy volume candle to the downside out of gold. This tells me that as of this point in the game, the bears have taken control of this price action. Bulls tried to push it up, failed, tried to push up, failed, tried to push up, failed, and then were drastically overtaken by the bears. So I wouldn't personally, again, this is not investment advice, but for me, I'm not interested in long positions on gold from this area. All right, USD CHF. Zen wants me to check out USD CHF. So let's see here. Do a bit of a top-down analysis here. Weekly, sort of stuck in this little range here. Daily bearish. I need to remind myself again of some of the economic data situations out of the Swiss. I know I took a Swiss futures buy, which is essentially the opposite of USD CHF, just Swiss USD. When you're trading the futures contract, it can be a little confusing, but it's essentially the same chart, just inverted. So bearish territory, bearish price action. Bit of a stalemate here since last week. Haven't really moved. I wonder if that's reflected in the Doxy as well. Not really. Seems to see downside yesterday and today. Swiss stalling a bit. So that indicates to me when you have significant dollar downside, but something like the Swiss is not pushing up heavy, that tells me there's a little bit more of a cause for concern of weak Swiss as well. It's not written in stone. The Swiss volume could come in at the end of this week after CPI. I think a lot of this Swiss bullish price action that we had over the last couple of weeks was due to some of that risk off sentiment that the markets were experiencing. You saw savings like Swiss and the Japanese yen rallying to the upside off the backs of the recessionary fears. And what was interesting about the Doxy is we were getting softening economic data out of the dollar that was triggering recessionary fears. So it was a little hectic to try to take sell on dollar pairs when the safe haven nature of the dollar, there was sort of this underlying thought process of if we're going heavy recessionary fears, the Doxy might start to pick up some safe haven flow activity. So yeah, it was a little interesting trying to trade that, but I believe that was the main cause for some of the Swiss action. It seems like some of the recessionary fears have dissipated a bit. I don't want to say they're completely gone. They've completely evaporated. If we look at stuff like stocks, we are fading a big portion of this move. I would say for something like S&P, which we tend to use as a gauge for the overall U.S. stock market, a break above this 5570 level, that's a pretty significant enough level that a break and sustained amount of trading above that level for me would be enough for me to consider the risk off market kind of dissipated, that people have relaxed, they've chilled out, they realized the world isn't ending, that the economy isn't just going to explode, or not explode, I guess I should say implode, and we will have completely dissipated that risk off market, in which case I could see some Swiss downside, which would be USD. It would be USD CHF consolidation, honestly, because when you have two weak currencies, if they're both headed to the downside, one has to be significantly weaker than the other to continue getting downside move. So US dollar would need to come out and be significantly weaker than the Swiss in order to get downside momentum out of this pair. Vice versa, Swiss coming out drastically weaker than the US dollar, we could see some upside here out of USD CHF. As far as positioning goes right now, this one is tough. This one is not it's not an ideal situation for me. As far as anything I would be interested in trading, unless recessionary fears start to kick back in. If recessionary fears start to kick back in, I think selling USD CHF could be a good move. Again, that's still sort of tricky simply because of the safe haven nature of the USD. So there are times where, for me personally, I will tend to avoid something like USD Swiss if I don't have any real good reasons to trade the Swiss, right? Whereas like right now, 2 weeks ago, great reasons to be involved with the Swiss. Fantastic reasons. The risk off safe haven flows, it was just safe haven flows were dumping into Swiss. They were dumping into the yen. It was a perfect time to be involved selling US dollar against CHF. Now, not so much. It's kind of like that sentiment has seemed to dissipate. If it pops its ugly head back up, it might be worth taking a stab at. All right, what source shows the bank range assessment of upcoming cuts and hikes? So I have access to a Reuters terminal, which is typically it's like a I want to say like $20,000 or $30,000 a year program. I have access to it for a lot cheaper than that I share with my guys. The other way that you can get this is by going to Financial Juice. And if you type in, I think, features.financialjuice.com. Let's see. Hit articles. Day of the event. Financial Juice is usually pretty good about printing this stuff. And I believe I don't know if their support is available to free members. I have the paid version of support, so I can always hit them up and ask them for more range information, but I tend to get it here. But if you use something that's free like Financial Juice, their articles, you can go here and see US CPI for July year over year. They have their ranges printed here. So the top of the range, 3.1, 2.8. I think this calendar is already gone beyond it. So I've only got a streaming access to this. I can't scroll through it. But we can actually pull it up. $3,128 for year over year, year over year, 3,129. So they have. So this is the thing about the range numbers. They can differ from calendar to calendar. Most of them are relatively close enough to where it's not going to make too much of a difference. Something else that helps is having access to the paid version of Financial Juice, where once you get these numbers, to make it easy when it drops, you can input alerts here. And so let's say I'm just going to throw out some pretend numbers here because I don't remember the exact numbers off the top of my head. If CPI year over year prints greater than 3.8, which would be the top of my range, we're just going to say, I'll be looking for US dollar buys, and it'll print a buy alert right here. Vice versa, let's just say below 3.0 would be my sell trigger. You can save that, and it'll print either a buy or sell button right here as soon as the data drops. It helps because they color code red. It's obviously bad for the dollar. Green is good for the dollar. And then this gray white number is just as expected, no surprise, et cetera, et cetera. So Financial Juice is a great resource. Definitely check that out. I'm not seeing any more questions come through, guys. So with that, I believe I'm the last guest for the day. I'm going to go ahead and sign off for the show. If you guys have any questions, feel free to hit up anybody from A1 and from all of us here. Have a safe trading day.
Thanks for tuning in to today's A1 Trading Show. Make sure to subscribe and to turn on post notifications so you don't miss the next one. Also, we're looking for more guests to come on the show. If you're comfortable being on camera, have trading experience, and you're looking to grow your audience exposure, we'd love to have you on. In the live stream chat and description below, we'll drop a link to apply to be a live stream guest and join in on the conversation. We hope to have you on soon. That's all for today. Trade safe, and we'll see you next time.